Hi viewers, so let's start today's analysis. I think a day of consolidation for the markets. Markets not trying to go high, not trying to go low, and we analyze the Indian markets. As I told that expiry after the expiry, we analyze how much legs more are left into the Nifty or other indexes, and how far we can reach from here, and what are the optimum levels, or let's say optimum uh, levels which we can think of from here on. But before that, we'll start with the global market. As usual, a lot of things are going on there. So yesterday, in fact, day for yesterday, I think the Scott Bessent, who is the Treasury Secretary, has told that uh, US cannot sustain this kind of tariff war with China, and it has to reach to some kind of a logical conclusion. And he also told yesterday that a lot of gains can be done for US and China put together as they think and they come on table and discuss. Now, also there was a U-turn yesterday from Mr. Trump in terms of his expulsion, which Mr. Trump was thinking to remove Mr. Powell just because he is not cutting interstates. Now, yesterday, a statement came. I think there was a speech from Mr. Trump yesterday, and he told some very interesting things. So he told there is first of all he agreed that yes, the tariffs are very high on China, and this kind of tariffs are not sustainable and cannot be levied in this way. Now, again, he has to only think that he is a person who has levied such taxes. He is a person who has put this kind of tariffs without even thinking. He has only continuously increased the tariffs. And when China first retaliated against US tariffs, he was the one who told that China has got it wrong and that is the wrong move. And now they themselves are not able to sustain. US cannot sustain these kind of tariffs. It will bring them into a great depression. It will bring them into a great recession. The people over there cannot sustain this kind of tariffs because the things will become very, very costly. They have at least around $2 trillion of trade with China. If they're putting 145% tariffs on those, which means those products will become very, very costly. And don't forget, the operating mechanism of US has been for last 20, 30 years that don't produce, just consume, but consume the cheapest. That is the reason why the tariffs are always less for US. It was intentionally kept less. They wanted the cheap products to be consumed by the US consumers, and that is how they want to drive consumerism. They wanted to drive the consumer market in US, and that is how they wanted to grow their GDP. That has been the mantra of US. But because of that, a lot of trade deficits has happened. Dollar has been the reserve currency, and because of that, US cannot sustain now these kind of fiscal deficits. But this is a problem which has been created by US and it cannot be removed in a single night and by just putting tariffs. Although Trump may say that tariff is a beautiful word, third beautiful word, I think after love and religion, he says this is the third beautiful word he has come across in the dictionary. Now, some more statements which again brings confusion in the markets. There was a talk that auto tariffs will be rolled back. They were thinking the some kind of inside news were coming that Mr. Trump is thinking to remove the auto tariffs. Nothing happened. He came yesterday and told, no, I have no such idea. He in fact told I'll not be reducing the tariffs on Canada. In fact, he told that I'll be increasing tariffs on Canada. He told we need not to manufacture our automobiles in Canada. We'll manage ourselves. I don't need cars or any other thing from Canada. That was his statement, which means again confusion. And instead of softening some things, it is actually increasing. Sorry. So I don't think anything is happening so easily. And in fact, he told that it will take 2 to 3 years to come to a conclusion with China. Mr. Trump is giving statements that we'll deal with China in a nice way. We'll be, good to them. Tariffs will be reduced in a substantial way. Their wishes will also be taken into account. But nothing is happening on ground. China is not blinking an eye. China is confident that they will be able to fight this tariff war. They are at the moment getting an upper hand. They are saying that we want to discuss Tibet also. Sorry, they want to discuss Taiwan also, which means they are complicating the issue. Uh, they are thinking that this war will only be negative for US. It will not be negative for China, and they will have ways and means to come out of it. But US is shivering. They are getting all the jotels, and that is what they have been created by Mr. Trump. So in this kind of scenario, things remain still uncertain. It's not that US will start cutting the uh, tariff rates just because China is not blinking an eye. That will not happen. Otherwise, it will prove to the world that they are weak economically, and China is the number one country in the world. In fact, he told that some of the talks have already started with China, but just now, half an hour before, news has come from China that they have not started any talk with US. Nothing has happened on the tariff with China and US to be put together, which means it's only US which is showing some kind of a enthusiasm, some kind of a forward approach, but China is not blinking an eye, which means that this kind of economic world war will still continue. Even if US is able to retreat, even if US is able to find some deal with China, I think there'll be a long-term game in mind. Remember, whatever statements are coming, it is just coming because to cool down the markets, to cool down the impulses of the investors, to cool down the pressure is really high on Trump from the CEOs of the businessmen there in America. They are pushing, very hard to US to reduce this tariff and stop this game. In fact, now there are more than 12 to 15 states who have put case on Mr. Trump for this economic trade war. They say that, in fact, they have dragged Mr. Trump to court saying that the word economic emergency crisis, which Mr. Trump has levied, and because of that, he has levied all these tariffs in that part of the constitution for America. They are not accepting this, and they are right. How can trade deficit be an emergency, economic emergency? That is wrong. Even if Mr. Trump is able to sustain this 4 years of his presidency, after coming out, he'll have to face a lot of cases, lots and lot of cases. It will not be easy for him. He has signed all the documents. He has been showing on camera. He has been showing publicly that he has signed all those documents, all those tariff-related announcements, and it will be tough on him. It will be really tough on him. I think US, probably the path was right, but the thinking was right, but the path was wrong. So this is what is happening in US, and the things are very very critical. I don't think we are out of the woods as yet, and there might be some more pain, as people say that the maximum uncertainty may be over, but the maximum pain is still not over. Maximum pain is still not over. I think the pain is yet to come, and probably now the world order will shift. It's not that it will not shift. There will be differences, and I think some kind of greater war, economic war, will happen going forwards. Because US has understood that they are very late in taking these steps. China has actually become the number one economic power of the world, and nobody in the world actually wants that. Today also, China has no economic allies. Nobody wants to trade with China, but the problem is the way they produce their products. It sometimes becomes unstoppable at all to not get those imports from China because they are so cheap, they're innovative, and they're rich in engineering. So this was about the global markets. The dollar index has inched up, but it's still below 100. Crude is still around 60, 65, $66. Again, very comfort zone as far as India is concerned. Bond yield is around 4.31, which is slightly higher, but I think they will remain in a range of 4.2 to 4.4. That is what is looking like. And other parameters also as of now looking stable, but probably I think it's the silence before the storm. We are heading into a much more bigger storm. This is what I can expect. Mr. Trump always comes these kind of statements whenever he wants to cool down the markets, whether it's a bond market, currency market, their own stock markets. These type of statements only come to cool the investors' sentiment and to bring down some kind of some kind of good sentiment into the things. Otherwise, from inside, I think Mr. Trump is ready for the war, and he has to. The problem he has to, somebody or the other has to take China on their heads, and probably he has taken that. Let's see how it goes. Coming to the Indian markets, I think we are driven by mostly results. We are actually waiting for the results to be announced, and we're reacting on that. Now, if we see how the results have been so far, and I talk about Nifty companies. So, majorly, let's say three sectors have announced their result, which is IT. We got the results from SCL Tech, Infosys, TCS, Wipro, all four majors, and I think one or two mid caps also in terms of LTM, INT, and Persistent. And banks also, we've been getting the results from AU Small Finance Bank, but the bigger banks like ICICI Bank and HDFC Bank have already given the results. And we also got the result from FMCG now, three major companies of Nifty in terms of Nestle, HUL, and Tata Motors. Now let's analyze what is happening within these three sectors which have given the results, and cement also. For example, today we saw the result from ACC, although we're waiting for the Nifty company, but still ACC has given some results. We analyzed on that. Because Ultratech Cement, which is a Nifty company, has actually already touched this 52-week high. Now we all have seen the results of banks, splendid results, but the problem in the ICICI Bank was the credit growth, which came to 13.1%, which is 16-quarter low. But apart from that, the asset quality and other parameters were excellent. I mean, nowhere you have seen such kind of clean balance sheets from banks. So banks are still looking good, their valuations are still looking good, and Bank Nifty is still looking good. So every correction which Bank Nifty is doing, probably it's an opportunity to buy. We will be touching 60,000 very soon. In this calendar year, we'll definitely touch 60,000. There is no doubt on that. Valuation point of view, if you see the long-term average, they are still trading below it or at par with it, in spite of having such a ferocious move. Still, the valuations of Bank Nifty are very reasonable. And don't forget, Bank Nifty has underperformed Nifty for the last 5 years. After 2019, consecutively for 5 years, uh, Bank Nifty has underperformed. So Bank Nifty still remains strong, which means we will not see many cuts from Bank Nifty. The only problem is it is very FI dominated. So if anything happens around the world, then probably we might see some kind of shift. Otherwise, Bank Nifty looks very strong. Coming to the IT, there have been a degrowth. YY profits have been less for all companies except for the mid-cap companies, which is Persistent, which is given 2% YY growth, and probably LTM 6% YY growth for Persistent, and around 2% YY growth for LTM 90. But these are the mid-cap companies. Nifty companies we talk about all have given degrowth in terms of YY profits, right? Third major sector which impacts Nifty a lot are the FMCG sectors. All three have given very bad results. Tata Consumers, they have missed on the revenue. Nestle has missed on the volume growth. With the volume growth expected for 5%, they're given 2%. YY growth is less, degrowth in terms of profits, right? HUL has also given a very less volume growth. Again, they've given good volume growth, but again, they've missed on profits. And again, the guidance is not good for HUL, where they're saying that the profit percentage margins will be decreasing from this financial year, from 24% to 22-23%. This is what marketing not like. And we saw a major cut in the HUL stock prices during the day. Nestle also very flat kind of result, but YY drop in terms of profits, 5% drop on profits on Nestle also. So FMCG is giving you a cut on profits on YY basis. IT is giving you a cut on the YY profits. Only bank is something which is giving you the YY increase of profits. Three sectors, but this is a trend. Now, the consensus on the Nifty EPS was 1168 for FY25, right? But we have, which was around 15% earnings growth, but the earnings growth has been only 2%, which means against 1150, that's kind of a EPS expected, we have just reached or will be touching around 1068 kind of a thing, 1070. There's been a major cut. Now, the expectation of EPS for this financial year, FY26, is kept at 1170. So, the expectation of profit growth or EPS growth, or let's say EPS value, which was kept for FY25, has been now kept for FY26, which means we have delayed our EPS growth by 1 year. By 1 year. Now, if you assume that you'll be getting those kind of EPS growth, let's say around 1170, around those figures. And now if you put a P multiple of let's say 20, 21, 22. So in the slowdown in the last 5 months, the EPS we touched around 19. Sorry, the P multiple touched around 19, 1 year forward. Now we are 20, right? 20 point something. The average has been around 21. Maximum we go to 24 also, 25 also. That is when you expect a good economic growth, then you give higher P multiples. Now, if you multiply this 1170 by 20, you will get one figure, which is the expected Nifty range, or let's say Nifty point by 21 and 22. So you yourself can calculate what are the Nifty levels if we assume that the EPS value will be 1170 at the end of FY26. At the end of FY26. The risk will depend on you, how much you want to take the risk. But if you multiply those things, I don't think we are getting any figure closer to where we are. Even if you take 21, greater than 21 kind of levels, 22, even if I take, we are around that range. If you want to give higher multiples, you can give it. It depends on you. But when you can give the higher multiples only when you see a higher economic growth going forwards. Are we doing that? IMF yesterday cut around 0.3% GDP growth, 0.5% in fact. GDP growth for FY26 and 0.3% for FY27. We are in a world of turmoil. We are in a world of uncertainty. We are in the world of economic world war, which is driven by this tariff war, etc. All those things. IT is not performing. FMCG is not performing. IT will remain sluggish because of US slowdowns expected, whenever it happens and whatever it happens. And FMCG anyways is not giving result for so many years now. So probably people have lost hope. In fact, I also lost hope now on FMCG, because if you have good monsoons, if you have those tax rate cuts the government has given, in spite of the companies are coming and saying the guidance will be less, the margin will be less. So if actually saying the margin will be less means they will go for discounts. They want to keep their top line growth and they will go for discount. That is the only reason. Which means they are facing competition in the local products. So a nifty heavy of ITC, HUL, Nestle, Tata Consumers, all those kind of companies will not allow the nifty to go up. Even IT companies will not allow the nifty to go up to an extent until unless we see some kind of optimism in the US market. So nifty IT still has some hope. But FMCG will be hoping it is all domestic driven. Nothing can happen better than this. Right? Banks are doing good, they continue to do good, but they have a limitation. And again, they are FI dominated. So जहाँ भी कोई issue आता है, they will start selling the bank nifty. So how will the nifty go up? So valuation perspective, we are not reaching to those levels. Uh, and again, the results are also not coming in those directions. So be careful. That is why I told that book profits. Day for yesterday also I told you book profits. Probably one round of rally is over. This is what I think. But this is just my expectation. Nothing more than that. I'm just giving you logics for doing that, both on valuation perspective, results perspective after analysis. And anyways, we are into a world of some kind of uncertainty, and we've seen a good rally. It's not that we've not seen a good rally. Anyways, I've told you the overall target for Nifty for this financial year, as per valuations, come 25. But the market doesn't stop at valuations. They overshoot this market, and that's why I told 26,000 sometime in the year will get one time. And I still maintain it. 26,000 on Nifty and 60,000 on Bank Nifty is still possible. There's no doubt at all. It's still possible. Even you try, because we tend to shift or tend to extend those valuation points. It happens in stock markets because we see a lot of optimism. P multiple subjective figure. Somebody wants to be 22, 23, 24. It all depends what he's seeing. For example, when Modi was elected again in the last election, we stressed ourselves up to 25 P multiple because we thought a solid government has come, a lot of reforms will happen, but nothing is happening on ground. In fact, the government has become socialist. They're giving a lot of soaps. They're giving a lot of reliefs in the elections. Whatever elections they're fighting, they have been bound to give those kind of social advantages to the people, which will push the capex down further down. capex is still not happening to the extent which we actually want. Private capex will not come and kick in because of the issues of the tariff war. तो ग्रोथ कहाँ से आएगी? तो ग्रोथ कहाँ से आएगी? अब ग्रोथ नहीं आएगी तो हाउ विल द निफ्टी मूव? How will the Nifty move? So just take all these things in perspective. This is what my feeling is, and that is why today I've taken some more time on the Indian stock markets to be too precise. But this is what I think. So if you have to re-enter the markets, if you book the profits, so I book the profits, I'll be looking at levels of around 23 to 50 kind of levels to come back again to re-enter. Although I may still enter at some small positions, let's say at 23. So we'll see why exactly the market is falling, if at all they fall, and when to enter. We'll say going forward. But I think we should enter into the markets. Risk reward is better only if we get a cut of around 1,000 points. That's what my view would be. For some reason, let's say now this Pahalgam attack has happened, very unfortunate, but I think yesterday India has announced 3-4 diplomatic measures on Pakistan. Today, the Pakistan stock market for down by down by around 2.5%, and I think they've tested that surface-to-air missiles. Testing has been done by the Pakistan Army, which means they're expecting some kind of air retaliation, and they're prepared for it. Some kind of retaliation will always happen, but India is always tend to give those surprises. So first, never expected after Uri, we give those land. We enter into the Pakistan POK through land. Then we did those jet airstrikes. This was again a surprise. This time also they might be surprised. Who knows what from where we'll enter and how we'll enter? We don't know. But there's no doubt something is brewing up. Something is definitely going to happen. The market will tend to remain numbers out of it. They should remain numbers out of it, and that probably might give you a cut of some 1,000 points here and there, which might be an entering opportunity. Who knows? So we don't know the event as of now. But I probably feel that there will be some event which will pull down the markets and we get something around 1,000 points cut. It will be very healthy for the market and for people like us who book the profits and they will like to re-enter the markets. So uh, uh, this kind of problems are there in the markets. The results are getting pretty mixed. We cannot say that the results have been pretty good in terms of Nifty company at least. You analyze for three sectors. Let's see how cement also has done pretty good. So cement, we saw the result from Danu Bharat yesterday. They were very good. We got the result from ACC in the morning, which is also decent results. So I think cement as a pack is doing good, which is giving you confidence key. Some kind of infra working is going on, and I think cement is looking good. Means there is some kind of development happening, some kind of capex happening. That's a good point, and that's a good thing for the markets. That cement is going up. That means expansion is happening, and it might be better for our GDP growth, etc. All those things. So that's one good clue I could make out from the market. Another clue is that the crude is very benign, it's very down. Yesterday also, I think the statement came from OPEC Plus, where they are trying to increase their output further in June, right? Because there is some kind of fight which has happened, this has generated from Kazakhstan, where the new oil minister has told that we are getting fooled, the other OPEC members are not maintaining their quota, that's why we'll also produce more. So some kind of fight is going on. Ultimately, OPEC has decided that will be increasing our output in the month of June as well. So that's why we saw around 2% cut yesterday on crude, which means that crude will remain subdued. If you are producing a lot and if you're seeing uncertainty and you're seeing some kind of slowdown in US and China, then how can the crude go up, right? So that kind of confusion will still remain in OPEC, and we'll see those kind of if we continue to see those kind of output increases, oil prices will remain subdued, which is again good for the Indian markets overseas. So in terms of dollar index, in terms of crude, it is looking good. Bond yields are looking slightly higher. Rupee is becoming stable now. It is in that range. It moves 1 rupee here and there. FI flows have been very excellent, but we don't know till what point they will continue. Valuation point of view, we are almost there now where we should have been, at least for this rally. Now, future rally, we may extend, we may reach up to 26,000 for the calendar year one time. This is what I expect. And this is what the overall analysis for the market is. So with this, I'll probably end my video for today. Thank you so much for watching. I hope you would have liked it. Thank you so much.